So now let's switch gears and talk about a merchandiser's financial statement. So first we'll start with the income statement. There are two formats for the income statement. The single-step income statement presents revenues and expenses with no subtotals. And then there's the multi-step income statement, which presents revenues and expenses with subtotals to highlight significant relationships. So in the real world, businesses will use the multi-step income statement because it's more useful to the financial statement user to have certain subtotals calculated on the income statement, such as gross profit, such as income before taxes, such as total operating expenses. So a lot of these subtotals are useful to the reader, and so in the real world, most businesses use multi-step income statements. So this is a look at the single-step income statement. We see that we have our revenues here, and then we have all of our expenses, including cost of goods sold, all listed out. We have our total expenses, and then we calculate net income. So there's no steps in here that are intermediate. It's just revenues minus expenses to get to net income. In a multi-step income statement, we have what's known as operating income. So the steps are gross profit is first calculated, which is our net revenue minus cost of goods sold. Operating expenses are reported in two different types of categories. The first is selling expense. So this is related to marketing and selling the company's goods and services. And this also includes things like the delivery expense of transporting goods that are sold to the customer. So these are all selling expenses. And then there's administrative expenses, such as rent, utilities, admin staff salaries. And so these two categories are often presented separately. And there is a term in finance called SG&A. SG&A, selling, general, and administrative. That's what SG&A stand for in the term SG&A. So selling expenses are this selling expense that we discussed here. General are things like the rent, like office supply expense, that kind of stuff. And administrative, it's kind of rolled into one category. Administrative and general are pretty similar. So that term you'll often hear. What are the SG&A expenses of business? It's related to these selling, general, and administrative expenses. So the gross profit minus operating expenses equals the operating income. So this is another definition you often hear in industry. Your operating income is your gross profit minus your operating expenses. One note on operating income, it's before taxes, it's before other extraordinary items. So it's kind of the income your business generates from its regular course of business. So after we determine our operating income, the next section of the income statement reports other revenues and expenses. So these are revenues and expenses that are not core to the business. For example, if you have investments and you get dividends or interest payments that are not really related to your business, this would be an other revenue. And in the same way, you have expenses that are not related to the core of your business. So you would include those after determining your operating income. You would then report your tax expense, and then finally you would calculate your net income. So let's take a look at our multi-step income statement. So at the top here, we have all of our elements of gross profit being calculated. So we have our total sales revenue, we have these contra accounts, sales returns and allowances, sales discounts to get our net sales revenue. And then we have cost of goods sold. And so our first subtotal gross profit is here. And then we have our operating expenses. And again, we break our operating expenses into selling expenses and administrative expenses. So if you notice, there's one interesting thing. There's salary expense for selling, and there's salary expense for administrative. So the difference here is that these salaries are going to be for our workers who are directly involved with the selling of our inventory. So these are salespeople, these are marketing people, all those types of salaries are going to be included here. These administrative expenses for salaries are going to be like your accounting staff, your executives, all those types of salary expenses are going to be part of your administrative expenses. Another kind of example of this is, let's say your Apple Corporation, you have all the salary expenses of all your people working at the Apple stores. Those would be part of your selling expenses. But the corporate employees, the engineers, the accountants, the financial analysts, all that would be the salaries for your administrative expense salaries. So that's kind of the difference why you see some of the overlap between the categories where you can have, for example, also rent expense here for selling and for administrative. It's just it's determined by the function of what part of the business this rent is for. So we get our subtotals and we get our total operating expenses here, and then we subtract our gross profit from our total operating expenses to get our operating income. Then we have our other revenues and expenses. So in this case, we have interest expense here. We could have interest income, and then we have another subtotal of income before income tax expense, and then we have our income tax expense, and then we finally get to our net income at the bottom. Now let's talk about the balance sheet and statement of retained earnings for merchandisers. The statement of retained earnings for merchandisers and service business are similar, and the balance sheet for merchandiser, the only key difference is that it reports merchandise inventory. Besides that, it's very much similar to the balance sheets we've seen in the course thus far.